Good morning and welcome to the November edition of the VOF Monthly Podcast. I'm delighted to have Linh Vu, Head of Research at Vina Capital, join me today.
My pleasure.
It's Ling. It's the last podcast for the year, and if our viewers actually can see behind us, it's Christmas. So Merry Christmas.
Merry Christmas.
So look, Ling, we've had a really volatile November. If you recall, in October to the middle of November, some stocks in the market were down 20 to 30%. However, by the end of November, we did end up in positive territory, index up about 2%, the VOF share price up about 3% over that same period. But if you think about the index performance for the full year, and Vietnam is in an incredibly strong performing market, that performance, though, has been very much concentrated into a small group. You've been talking about this, but can you help sort of unpack this for our listeners?
Yeah, very concentrated, and majority of the gains is driven by the two conglomerates, Vingroup and Galax, and their affiliated companies. Those two conglomerates comprise of 9 listed companies, and together they represent about 25% of the total index weight.
So about a quarter of the index weight.
That's right. Yeah. And the VN index is up 26% year to date in US dollar terms. If excluding the two conglomerates, the market is only up about 5%. This means the two conglomerates contribute about 80% to the total return of the index this year.
And I mean, that's an incredible level of concentration, right? I mean, 26% down to 5%. We've not really seen that before, right?
That's right.
That, though, indicates, as an investor, that indicates there must be other pockets of value and opportunity. So if you sort of look beyond that, these conglomerates, and VOF, we do hold Vin Homes. It's been a long-term holding in our portfolio, and we've been benefiting from that rally this year. But if you look beyond these conglomerates, where else are you seeing value, and what are your expectations for earnings growth into 2026?
The VN index is right now trading at about 11.5 times 12 months forward PE. If you exclude the two conglomerates group, the market is only trading at about 10 times PE, which is attractive from the valuation perspective.
And then within what are the sectors that we should be looking at and paying attention to?
Overall, the markets, we expect the earnings growth of the markets will be in the range of about 15 to 20% next year, with some of the sectors offering attractive growth and attractive valuations when combined. Those are construction materials, properties, banking, consumers, and technology.
Right, which is great to hear you say that, because, as you know, they are reflected very well in our VOF portfolio. Cangdin Homes is the number one holding now. It's a real estate developer. Number 2 is Hoa Phat, the leading construction material company in the country. And then within the top 10, new additions to the portfolio, including Vietin Bank, CTG, which is a state-owned bank, but they operate very much like a private commercial bank. They're expecting one of the strongest profit growths for the sector 2025 and into 2026. But beyond sort of the valuations, right? The banking sector in particular has grown tremendously. It's been a big contributor to market performance. What are you seeing in terms of credit growth in the sector?
For this year, credit growth will be about 20%, and next year we expect about 18% credit growth for next year.
Right, and that credit growth translates into an engine of driving the economy forward.
That's right.
However, we talk a lot about these tailwinds that have been propelling the market, but there are headwinds. And in the last month, what we've seen is interest rates domestically here increase. On the flip side, we've had the US Fed reduce rates now. How should we understand this rising rate environment here in Vietnam?
Our view is, first, this is seasonal year-end high credit demand combined with tight interbank liquidities that prompt the 12-month deposit rates to increase to about 5.5 to 7% per annum right now. Second, and more importantly for interest rates, the uptrend is inevitable because interest rate has been kept at low level for a prolonged period. Just as a reminder, Vietnam was one of the first countries in the world cutting interest rates in early 2023.
Yeah, so that's remarkable. If you recall, in 2022, as US rates were rising 12 times, if I recall that year, so was in Vietnam. But in 2023, to stimulate the economic growth, Vietnam state banks were one of the first in the world, I think, to begin to lower rates. So we're coming off a low rate environment here in Vietnam already. So what you're suggesting, the recent increase, about 100 basis points, doesn't seem to be a major problem. What are you looking forward to in 2026 in terms of rate increases? And are there any impacts that we should be aware of?
For the deposit rates, we expect the rate to gradually increase by another 50 to 100 bp from now until the end of next year.
Excellent, excellent. And then if you think about the sectors, as we saw rates increase, your team certainly helped us sort of look at what our big exposures are and what potential exposures are. So for sectors like real estate obviously are more sensitive to rate increases, mortgages go up. But on the flip side, your banks also benefit from this because not only deposit rates go up, but they also can pass it through to lending rates, right? And we're seeing again lending rates also go up. So the margins and earnings for banks seem to be quite resilient and they're able to absorb this increase in rates. Okay, Ling, lightning round, 2026. What's your outlook?
I am constructive and positive on Vietnam's economic growth prospect and the markets, underpinned by the continuous reforms and pro-growth policies, leading to the improvements in business environments. There are certain risks and concerns. As we mentioned earlier, the rise of the interest rate and the currency devaluation risks. However, I think those risks are manageable and is unlikely to pose a material threat for the economy next year.
And I think, just to remind our audiences, I remember early November, barged into the room and you said, hey, FTSE Russell are expected to announce EM upgrade into 2026. So that feels like another strong catalyst to the market for the year ahead.
Yes.
Ling, thanks very much. Merry Christmas and Happy New Year.
Thank you.
Sorry, Ling, you want a triple espresso?